Today's market panel to talk about what Bernanke had to say and what the stocks did today. Joining us, Gary Rand. He is Telemuse Capital Partners founder and chairman with his top stock plays for the new year. Randy Warren Financial Service Chief Investment Officer, who will tell us what sector's going to drive this market. And Chris Gerst joining us from the pits of the CME. Chris, I'm wondering if the traders down there in the pits were watching what Bernanke said and trading against what he said.
Actually, the traders were looking to hear that same question answered about Bitcoin that you wanted answered. But as far as the trade is concerned, we saw that market rise because a lot of individual traders down here thought he's going to throw a bouquet to the market, talk about the growth. The audit the Fed statement was, I saw a lot of heads nodding behind me. Getting Congress involved in that sort of thing, despite what some people believe about traders, we think that would be a detriment to the market. Maybe has some volatility that some traders want, but a lot of individuals think that would be a detriment to the growth potential. And so to answer your question, everyone was looking at Bernanke about 5 minutes ago.
Yeah, and Randy, again, we didn't get any real clear signals from him about, it's always interesting to hear when he talks about the global economy. He always makes some comment about Congress and fiscal policy. He was asked about that, but really a lot of the things that Janet Yellen is going to face are not going to be, frankly, under her control, and that is Congress and this debt ceiling fight that we're about to take on our wings in the next couple of weeks.
Right, and these things are going to have an impact on the markets, but what you really have to listen to what he's saying in terms of the old adage of the Bernanke put, which I guess will become the Yellen put now. It's still in place. They're still producing $75 million worth of new money every month, if non-farm payrolls were to go down and the unemployment was to go up, you'd have some additional stimulus put in by the Fed. So the market should be in decent shape for this year, and I think the Fed will stay, on target with the data points that they've already set out.
Gary, let's talk about the average retail investor. And frankly, most average retail investors have lost out on this market rally of 2013. They didn't play. It was the insiders who played the biggest role in moving this stock market up. Do you think they will step up? Do you think they will release some of their cash and fixed income and do well in 2014 with the insiders?
Well, I certainly think you could see money flows from retail investors here. When you think about being a retail investor, you're usually investing for a goal or an objective, and you need your money to grow. This year, if you really missed out on being invested in the equity markets, you really didn't do too well. And so when you look kind of in the rearview mirror, you might be pretty disappointed with what went on last year and maybe thinking about playing catch up this year. And I think that's one of the dangers of the market going forward, frankly.
Let me just follow up. Why is that a danger?
Well, I think, you might get some money that is going into the market that normally wouldn't go into the market, and because people are chasing return. When they look and maybe they're going to their talking to their friends or whatever, they may be feeling like, this is it's not too late, and you're going to see maybe some more. Everyone is pretty bullish about the 2014 when you read what the press or watch TV. Most analysts have positive recommendations, and so I think you'll get both psychology, to drive some money in. And then fundamentals don't look too expensive yet, and I think that'll help attract money.
Chris, I'm curious if you think that the real money, the big money, is actually in the markets right now. We certainly saw, at least on the equity side, the inflows coming in for October. We'll get news from November coming up soon. They were decent, they were strong, but they weren't really blockbuster. Do you think that the institutional trading is still kind of on the sidelines here?
I think the institutional trading is not on the sidelines. I think what they're trying to do is really make up for those passive investors that they just sat in those equity markets, like the Vanguard fund that returned $1 on every $4 invested. These traders down here, if you said, oh, you know what, we're going to give you a 25 to 28% on the P&L that you're trading in your proprietary trading account, any of them would have taken that sort of return. The fact is that institutional money right now is chasing the passive investor. and a lot of individuals, and the reason that is they wanted to hit that bid throughout the year. Good news growth. No one got short. A lot of traders here are poised for maybe a back and forth first quarter, but second, third quarter, a lot of these traders are positioning themselves in the futures for a sell-off.
All right, Randy, let's talk about energy for a second. And we saw this big sell-off in oil this week. We were down 6%. The price of oil was down another 1.25% today. Is beyond whether that's a play or not and how it affects oil companies, et cetera. What do you think the oil price is telling you about the economy in general, the whole world economy? Is this indicating a slowdown?
No, actually, I don't think it's indicating a slowdown at all. I think we're dealing with a situation of simple supply and demand. And in the United States here, you've got ample supply, lots of new supply of natural gas, lots of new supply of oil coming online.
So we finally reached, forgive me for interrupting, but we were wondering when this would happen. We finally reached a point where domestic production is affecting global price as far as oil is concerned.
Yeah, absolutely. And it's not just our economy or not just our oil drillers that are finding that they can frack shale and come up with oil. It's all over the globe. It's in Australia, it's in Brazil, it's everywhere. It's not just us. So there's huge new supply of oil and natural gas all over the globe that's coming online now and in the next few years. And it's going to continue to put pressure on the price of oil. And that's going to be offset to some degree by the renewed growth in the global economy. But I don't think the global economy is going to pick up so fast that it's going to drive oil prices higher. I think oil prices are probably headed lower.
Sure.
And potentially the play there is in the airline sector.
Okay, well, but Gary, you're actually bullish on energy. You're actually on the other side of this. Why are you bullish about energy and where?
Well, I like the MLP space in the energy sector, and to echo Randy's comment about fracking and all the shale development. So rapid expansion of domestic energy production and transporting those assets to where they're utilized is a big business today and growing. And so things like Kinder Morgan, which has come down recently on some disappointing guidance with their distribution, but still, so average yieldings here about 6.25%. We like that. We think that's attractive. Yeah, down from 93 roughly to 80 here recently. And so we think that's a good entry point. You know, their disappointment was what they were going to increase their distribution only 7% versus the 12 or 14% the street was looking for.
We just showed our viewers it's at 80 and change right now. The entry point you're talking about. Gary Rand, Randy Warren, gentlemen, thank you. Chris Gersh, we will see you, of course, in a few moments when the S&P futures close.
Thanks, gentlemen.
Thank you.
So Crocs getting a big cash infusion from Blackstone earlier this week, sending the stock soaring 21%. Coming up in a First on Fox Business interview, we're going to speak with the company's CFO about its plans for the money and its search for a new CEO. Jeff Lasher.
Also, how about this for a bold call? We have a strategist who says it's time to ditch Twitter and buy